Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Coinbase reported earnings last week, and really this is steady as it goes for a company like Coinbase. Not a lot of huge headlines. The stock didn't really have a massive reaction, but we're starting to see that if Coinbase can make it through this crypto winter, as we're calling it, and come out on the other side, not necessarily with more trading volume, but with more infrastructure and more real businesses being built on the blockchain, that's going to put the company in a very good position. So I want to go through some of the key numbers from the earnings results and discuss how investors should be thinking about this long term. I'm not really concerned about does Coinbase beat or miss expectations this quarter. I'm thinking about what is this company going to be in 10 years, and can this be potentially a 10x stock over that period of time? I think it has the potential for that, and we'll dig into some of those metrics here. My name is Travis Hoyam. Thanks for watching Asymmetric Investing, and subscribe here on YouTube for all my content. And I want to thank this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And let's just go to some of the high level metrics for Coinbase. This is a look at revenue over the past year, net loss, and adjusted EBITDA. You can see that conditions are improving across the board. Revenue is actually up. I'll dig into where revenue is growing because it may not be exactly where you think. Net loss is improving though. So even on a GAAP basis, just barely losing money, and adjusted EBITDA and free cash flow are both positive. I'll get to that cash number as well. The actual results were also better than expected. And I think the big thing that we should take away from 2023 is that management has cut costs dramatically. These operating costs are declining, and then sales and marketing expenses in particular are down dramatically. There is a lot of stock-based compensation, so that is a non-cash cost, but it is reported on the bottom line for GAAP net earnings, and it's potentially a dilutive force as well. So something to keep in mind. You can see here that trading is definitely not driving results for Coinbase. These are the trading numbers. Consumer trading continues to be on the decline. Institutional trading revenue is only $14.1 million. So not a big number there, even though they do have a lot of institutions that are using Coinbase services. Where the real growth has come is in subscriptions and services. So let's go through a few of these. Stablecoin revenue is related to the USDC token. That is something that Coinbase helped found with Circle, another company that potentially is going to come public in 2024. But they generate revenue by investing the dollars that are backing that stablecoin. If there's $10 billion in USDC tokens out there, there's going to be $10 billion of assets backing that. That money can then be invested in things like treasuries, which are now yielding 5%, 5% on $10 billion, about $500 million. And Coinbase gets a portion of that. That's what this revenue is primarily from. So $172.4 million, up from just $76.9 million a year ago. And that revenue basically goes straight to the bottom line. Blockchain rewards is another aspect of revenue. There's a number of different things that go into that. Interest income, this would just be on the cash that's on Coinbase's balance sheet, a little over $5 billion in cash right now, $40 million in interest income. Custodial fees, so the Coinbase is a custodian for things like ETFs. This is going to be one of those bullish things. If we do get ETFs approved by the SEC, Coinbase is going to generate even more revenue from those custodial fees. And then subscriptions and services. There's a number of cloud-based offerings, wallet as a service, a bunch of different products that Coinbase offers, and that's what that is. So from a net revenue perspective, you see this is very different than the trading trend. Revenue is actually up from $576.4 million a year ago to $623 million. I think it's worth highlighting these operating expenses again. Technology and development has just dropped like a rock over the past year. This is related to the company's cuts that were made late in 2022 and early 2023. So not quite a 50% drop there, but a really big drop in expenses. General and administrative, you see the same trend. And so overall, operating expenses down about $400 million on a quarterly basis. And full-time staff is actually down about 1,300 people. So big cuts made at Coinbase, but they continue to grow revenue as they're cutting those operating expenses. This is the $5.5 billion in cash that I mentioned earlier. Most of that is in money market funds. Some of it is in corporate cash, USDC tokens, $401 million, and then cash held at third parties. But here is the really important thing. This is the cash walk from June 30th to September 30th. Adjusted operating cash flow, $292 million. You have some capital expenditures, some M&A, gains on crypto investments and inventory, financing costs, repurchase of debt. So cash is actually going up slightly despite the fact that they purchased $177 million of debt. That was, by the way, purchased at a discount. And then there were some other transactions as well. What you get is a slight increase in cash on the balance sheet for Coinbase. So we have gone from the point where Coinbase was basically printing money now into this bear market where things are about as dormant as they could possibly be in the crypto industry. People are still building things, the blockchain is still active, but Coinbase is not losing a significant amount of cash. In fact, their cash balance is actually increasing slightly. So if there is a recovery in the blockchain, in crypto, this bodes really well for Coinbase's finances and operating leverage. That's one of the reasons that I'm bullish on this stock is if they can do this well in this kind of market, how are they going to do when things are even more active? Now, management spent a lot of the conference call talking about the regulatory landscape, where we were in the US and around the world, how some new products are being launched, like futures trading, and then companies that are adopting some of their technology. But at the end of the day, a lot of these things are just building for the future. If 10 years from now, we're not using the blockchain to make transactions, whether that's financial or buying digital goods, then Coinbase is not going to be a company that's going to outperform the market. But I think this technology is fundamentally better than the existing infrastructure in a number of different ways, whether that's in finance or in saying that you own a subscription. Crypto and NFTs, or the crypto or stable coins and NFTs, I think could provide a lot of value there, even if we're not using them in the same way that we do today from a trading perspective. Maybe they're just sitting in the background in an app that you use, using a Coinbase wallet as a service. I think that's probably more likely to be the kind of use case for crypto and Coinbase in the future. But if we are doing those things, Coinbase should be able to grow, in those subscriptions and services revenue momentum that's going on right now. Really bullish for the long-term future of Coinbase being the go-to provider. I think that after everything that we've gone through in the crypto industry over the last 2 years, the collapse of FTX, challenges that Binance is going through right now, Coinbase has really come out looking like the most solid player in the industry. And so if you're an institution or a business building on the blockchain, I think this is a critical partner. And that's one of the reasons to be bullish on this company. Results aren't going to wow investors, but the fact that Coinbase is able to actually increase their cash balance at a time when the crypto market is down as much as it is I think a really positive sign. If management can continue to improve that balance sheet, doing things like buying back debt, I think that will bode well for Coinbase long term. But it is going to be a long road ahead if this is going to be a high performing stock over the next decade, because there's a lot of questions to be answered, whether those are regulatory or use case related. But what do you think about the results and the direction that Coinbase is headed? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.